Welcome to the Economist in Your Ear podcast. In a world, well, seemingly defined by escalating trade tensions, especially between the big players, you have to ask, don't you, is it really possible for a country to sort of reroute its entire economic engine under intense pressure and not just survive, but maybe even reshape its global role? Today, we're digging into recent claims about China's trade performance, particularly with America's pretty aggressive tariff policies and these attempts at economic isolation. On the surface, the data suggests China's trade machine is, well, remarkably resilient. But as always, the headlines only tell part of the story, right? We need to get beyond just the numbers.
Exactly. When you start peeling back the layers, look at the global supply chains, the geopolitical moves, the picture gets way more complex than just thriving versus struggling. We need to unpack what's really driving China's trade figures, where the strengths are, sure, but also where the vulnerabilities might be hiding.
Okay, so let's unpack that headline story first. The official narrative seems to point to this remarkable adaptation. What are the key figures painting this picture?
Well, what's fascinating really is the speed of it all, the impact of U.S. policies and China's strategic shift. Over the past 3 months, China's exports to the U.S., they plunged. By about a quarter year on year, August was even starker, roughly a 33% drop compared to last year.
Wow, third in 1 month.
Yeah, and America's share of China's total exports fell from 15% down to just 10% in August. It shows pretty clearly the bite of U.S. tariffs and these pacts targeting transshipped goods, goods routed through other countries to avoid tariffs.
Okay, so a significant, undeniable drop with the U.S., that sounds like it should hurt badly. But the overall numbers, they suggest something different, don't they?
Precisely. That's the surprising part. Despite that substantial drop in a key market, China's overall exports actually climbed. From June to August, total shipments were up 6% year on year, and in August alone, up 4.4% year on year. This isn't just resilience, it indicates a really rapid rerouting of trade, faster than many expected.
Right. And this is where it gets really interesting, I think. Where exactly is China finding these new markets? How are they offsetting that U.S. decline so effectively?
The data points quite clearly to a geographic rebalancing, a deliberate pivot. Exports to ASEAN countries, the Association of Southeast Asian Nations, jumped by about 20% over those 3 months.
20%.
And 22.5% just in August. Huge growth. Sales to the EU were also up, nearly a tenth over 3 months, and around 10% in August by value. That almost matches the value going to the U.S. now.
Almost matching the U.S., okay.
But maybe the most striking shift, it's towards the global south. Exports to Africa surged by a third in the past 3 months. That puts them on track for a record year in trade with Africa.
A third to Africa. So what does this tell us about China's strategy? It sounds very much like they're actively courting these other regions, building different kinds of partnerships.
It absolutely does. And it raises big questions about how effective U.S. isolation efforts can really be. China's responded, of course, with its own tariffs. But more than that, look at the Shanghai Cooperation Organization Summit back in September. They positioned themselves explicitly as an alternative to America, urging members to, quote, oppose Cold War thinking and bullying.
So it's economic and political maneuvering.
Definitely. And a major engine for this, particularly the economic side, seems to be the Belt and Road Initiative, the BRI.
Ah, yes, the BRI.
Yeah.
We hear so much about it. Is it actually delivering tangible trade benefits now? Is it the flywheel people thought it might be?
It really seems to be proving critical. In the first half of 2025 alone, BRI engagement hit a record something like $124 billion in new contracts and investment.
$124 billion in 6 months.
Yes. And Africa accounted for a big chunk of that, about $39 billion, including $30.5 billion in construction contracts. That's a five-fold increase year on year.
Five-fold.
These projects directly fuel trade. They create immediate demand for Chinese equipment, materials, you name it. Take Nigeria, for instance. Exports there leaped by over half in the past 3 months. Why? Demand for equipment for Chinese finance railways and power generation projects.
So the infrastructure projects literally pull in the goods.
Exactly. It's a self-reinforcing cycle.
And beyond goods, you mentioned shifts in the financial plumbing too, right? Like currency moves. That seems significant.
That's right. It's maybe more subtle, but potentially very important long-term. Kenya, for example, is apparently negotiating to convert a large dollar-denominated rail loan into yuan. It's part of a broader push to increase the use of the RMB, the yuan, in international settlements. Egypt, Nigeria, South Africa, they've also signed currency swap agreements with China. So this diversification, it isn't just about where the goods go, but also about the financial architecture underneath it all. chipping away at dollar dominance, perhaps.
Okay, and one last piece on this resilience picture. How is China cementing its role in these new supply chains? It's not just about selling finished goods, is it? There's something deeper.
This is a really crucial point, and maybe more subtle. It points towards a longer-term strategy. Shipments from China to places like Thailand and Vietnam were up significantly a quarter higher between June and August. Especially in electronics and machinery, flows to both were up over 40%.
To Thailand and Vietnam, so intermediate goods.
Exactly. Now, some of that might be, front-loading companies rushing orders before potential new tariffs hit.
Sure.
But there seems to be a more profound rewiring happening. China is actively moving parts of its production into ASEAN countries, Indonesia, Malaysia, Thailand, Vietnam. Why? To satisfy what are called rules of origin. These rules determine where a product is officially from for tariff purposes.
So making the goods in ASEAN to avoid tariffs on Chinese goods.
Precisely. It minimizes the whole transshipment scrutiny we talked about, but more importantly, it effectively cements the role of Chinese firms within these regional supply chains. They become integral parts of production within ASEAN.
Making them much harder to just bypass or design out.
Exactly. It's a much more embedded strategy.
It really sounds like a sophisticated dance then.
Yeah.
Much more than just a simple retreat or redirection. It's adaptation, integration.
It is. A strategic repositioning in response to pressure.
Okay, so on the surface, China appears to be navigating these headwinds, maybe even turning challenges into strategic gains. But, as we often find, the real insights are in the nuances, aren't they? Is China truly thriving in the fullest sense? Or are there deeper considerations, maybe some hidden costs or risks, when we look past those headline figures?
Yeah, I think connecting this to the bigger picture, thriving might be too strong a word, or at least it overstates the quality of this growth. While the headline export growth is impressive, no doubt, in terms of speed and scale, it often masks the reality that China is essentially trading around the U.S. barriers now. They're leaning more heavily on destinations where margins are likely lower and on these intra-Asian supply chains.
Lower profits, basically.
Potentially, yes. It keeps the volumes up, the factory's busy, but it doesn't necessarily guarantee higher profits or, importantly, pricing power, especially when you factor in the persistent factory gate disinflation within China. Manufacturers are struggling to raise their prices.
So, volume over value, perhaps.
It could lean that way. It's certainly a trade-off.
That's a really critical distinction. Volume doesn't always equal long-term strength. What about the durability of this diversification? Is relying so heavily on these new partners, these new engines, actually risk-free?
Well, no, definitely not risk-free. That raises a really important question about sustainability. The Africa ASEAN and BRI engine, it's real. The numbers show that. We've seen the figures. However, it relies heavily on project cycles. Big infrastructure projects don't happen smoothly. They happen in bursts. And it depends on the sovereign balance sheets, the financial health of the recipient countries. They can pause projects. They can reprioritize spending.
Right. Political changes, economic downturns in those countries.
Exactly. And it also depends, crucially, on continued policy goodwill. That's not guaranteed. We're already seeing, tightening trade defenses from the EU. The U.S. isn't letting up on transshipment scrutiny. Even Mexico is proposing curbs on some Chinese goods, autos, textiles, plastics.
So the pushback isn't just from the U.S. anymore?
No, it's becoming more widespread. It creates a much more volatile and, frankly, less predictable environment for China's trade compared to the old days of relying on established Western markets, even with tariffs.
You mentioned Europe. The numbers look pretty good in August. Exports were up. Is Europe becoming a reliable new cushion for China, a replacement for the U.S. market?
I wouldn't count on it being entirely reliable. August saw an uptick, sure, but that sits alongside growing structural friction.
Friction like
Brussels tightening its trade defenses. The obvious example is the countervailing duties on Chinese EVs, basically. Tariffs to offset alleged subsidies.
Right, the EV probe.
And Beijing has hit back, hasn't it, with duties on EU pork. It's becoming tit for tat. So it's probably better to see Europe as more of a swing buyer.
A swing buyer, meaning?
Meaning a market that can absorb goods when conditions are right, but it's not a guaranteed secular growth replacement for the U.S. market, not with these ongoing disputes and Europe's own protectionist tendencies growing.
So expect more ups and downs with Europe. Choppier flows.
I think that's likely, yes.
And those currency shifts, Kenya potentially converting a loan to yuan.
Yeah.
How significant is that really in the grand scheme of global finance? Is it more symbolic than substantive at this point?
It's definitely symbolically important. It shows China's ambition, the direction they want to move in internationalizing the RMB.
But
Practically, there are still big hurdles. Depth and liquidity constraints in the yuan market still limit how far and how fast RMB settlement can really scale up globally. So while it's a fascinating development and one to watch, it's still pretty marginal in terms of overall global financial flows right now.
Okay.
The dollar's dominance isn't going away overnight, but, it's maybe a sign of hairline cracks appearing.
So pulling it all together, immediate future versus long-term rewiring. Are we looking at temporary gains, maybe firms just front-loading orders, or are these fundamental shifts that are going to reshape things for years?
I think it's really a mix of both. Some of the recent strength, probably does reflect firms rushing cargo ahead of possible tariff changes, or maybe exploiting temporary lulls in the trade disputes. That's short-term stuff.
Tactical moves.
Right. But the medium-term signal, I believe, points to something more profound. This manufacturing to markets migration into ASEAN and the global south. China is putting down new roots, investing in factories, supply chains, infrastructure in these regions.
So it's structural.
It looks like a strategic adaptation, yes. But it's an adaptation that comes with a whole different set of risks and rewards compared to relying on the old Western markets. It's evolution under pressure, not just a temporary fix.
Okay. So Washington's pressure, it hasn't stopped China's trade machine, clearly, but it has definitely forced, or at least accelerated, this geographic rebalancing. But maybe thriving is too simple a word, given the questions around profit margins, in terms of trade, the policy risks. And for you, the listener, this really matters, doesn't it? Thinking about how this impacts you.
Oh, absolutely. This directly affects the global economy you participate in every single day. This rerouting of supply chains, the rise of potentially new trade blocs, the shifts, however small initially, in currencies, it all feeds into price stability or instability. It affects product availability, the competitive landscape for businesses everywhere.
Yeah, the cost of goods, where investment might flow next.
Exactly. Understanding these dynamics helps you anticipate changes. Changes in costs, maybe where new investment opportunities are emerging, even the broader geopolitical climate that influences everything from, say, energy prices to tech innovation.
It's like seeing the hidden currents beneath the daily news headlines.
Precisely. It's about understanding the deeper shifts.
So as we wrap up, there's a compelling thought that The Economist article touched on. It drew an interesting parallel. It suggested that America, by building what some are calling a fortress North America, with its own tariffs, its own protectionist moves, it might risk making a mistake similar to China's own 15th century inward turn, like building the Great Wall, which arguably slowed its own dynamism back then.
That's a provocative comparison, and it raises a fundamental question, doesn't it? In today's deeply interconnected world, is it actually possible to truly isolate a major economic rival? Or does attempting to do so simply accelerate a rebalancing of power and influence, maybe even at the cost of your own dynamism, your own innovation?
A crucial question for policymakers everywhere.
Indeed. And to really see how this plays out, how this monumental shift unfolds, there are a few key things you'll want to watch closely in the coming months.
Okay, what should we be looking for?
First, keep an eye on the official customs data for Q3 and Q4. See if that August pattern, the EU versus US shares of China's exports, actually holds. Does it stick?
Right. Is August a blip or a trend?
Second, watch how those big BRI contract awards, especially in Africa, convert into actual shipments over the next, say, 6 to 18 months, particularly in things like rail equipment, power generation gear, mining supplies. Does the money turn into actual trade flows?
Got it. Contracts versus reality.
Third, watch for any widening of the EU-China trade disputes. Does the tit-for-tat move beyond EVs and pork into other critical sectors? Batteries, maybe, machinery, chemicals? That would signal a serious escalation. And finally, keep tracking those RMB settlement milestones, like the outcome of Kenya's loan conversion talks. It's a key barometer, really, of how much global trade can genuinely start to shift, even incrementally, away from the dollar.
Fascinating implications. A world definitely in flux. Understanding these underlying shifts feels more critical than ever.
Absolutely. The tectonic plates are moving.
Thanks for listening. Follow us for daily insights into world affairs, and don't forget to like, comment, and share.